Hello and welcome to the Mouthy Money podcast. This is part two of a two-parter looking at inflation in Argentina and now explaining and understanding a little bit how that applies to Bitcoin, what Bitcoin is, and how it could be potentially the future of money. I'm joined by Trevor Schrock, who is a Bitcoin educator who lives in Argentina. He's an Argentinian American. Hello, Trevor.
Hello, Ed. Thanks for having me again. Really excited to
Clip.
talk about all things Bitcoin and inflation related with you.
So, just to kind of recap, in the last episode, we looked at kind of why inflation is so bad in Argentina, basically because the government has debauched its currency, and the kind of the conclusion from that we drew was um, they printed lots of money, so they're potentially going to dollarize the economy because that takes away control. But the logical extreme here is, and this is why Bitcoin was created, right? Is why not have a truly kind of, I guess you call it, uh, free currency where nobody, no government, no single entity has control, and that's what Bitcoin is, right? Tell us, just give us the kind of the explanation of what Bitcoin is in a nutshell.
Right. So let's talk briefly about the problem Bitcoin's trying to solve for everyone in the world. Up until 1971, the US dollar, the global reserve, was backed by a certain amount of gold. This is kind of a byproduct of World War II, where there was no confidence amongst the nations in Europe for who was going to be storing their treasury, which in that day was more often than not in gold. So the United States was more than happy to babysit everybody's gold. Well, the United States was not as upfront as they should have been with everybody's gold supply and started to rehypothecate gold across financial markets. And there was a little bit of evidence pointing to the fact that perhaps the US didn't have everything they said they had. So France made a call on their gold supply. Hey, Uncle Sam, can you get us our gold back? And in 1971, long story short, Richard Nixon was he essentially had to take the fall for the missteps of previous administrations. And when he announced going off the gold standard, it was announced as a temporary measure. Well, here we are nearly 53 years later, and we have yet to return to the gold standard with the world
And
operating on a fiat standard.
the mad thing here as well, and I'm going to interject for my UK listeners, is actually the UK was on the gold standard as well. The pound was on the gold standard, but it actually left the gold standard in 1931. So we had already almost been through this experience where the gold standard, which, if you look at it historically, is all humanity has really known, right? In the history of money, is
Yep,
gold as a measure of value. You
yep,
look back at the Roman Empire, and everything was monetized in gold, and in fact,
yep,
they had in periods of hyperinflation where emperors would physically debauch the currency. They would clip the coins and that
yep.
kind of thing in order to make the gold go further and all this kind of stuff. So this is like a time immemorial problem, right? It's come round lots of times in thousands of years. So the
Yeah.
UK left it in 1931. The US is having the same reckoning in 1971. It's the end of what was called the Bretton Woods Accords and all this kind of stuff, like you said, after World War II. So what comes next? What is fiat currency? How does that work? And why everybody's on fiat currency, right? That's how
Yeah,
the
so
whole
like
world
you,
works.
yeah, yeah. So like you said, you know, we've seen throughout history going back generation upon generation that central planning authorities will do whatever they can um, to debase the currency for their own gain. Anyone who's familiar with a coin that has ridges on it, the whole reason why those ridges were created were so that you couldn't shave off a sliver of a gold or silver coin. Um, and so uh, going to a global reserve where the value of the currency is simply by decree, by the decree of politicians looking to win popularity contests. Um, it's not really backed by anything of physical value, which is a pretty crazy thought when you think about it. And so here we are 50 years into this experiment. And, you and I both come from relatively financially privileged backgrounds, shall we say, coming from two countries where we have yet to really experience currency implosion. But the vast majority of the world is living from one currency implosion to another. Most of my friends abroad have yet to spend, more than 30 years with one currency. And so this is the problem, long story short, that Bitcoin is trying to solve. The cypherpunks, a group of people who were trying to cryptographically create essentially what email has done to physical mail. They sought out over 40 years ago. This has been a work in progress for several decades. They were looking to discover some sort of way to create an electronic money that cannot be debased by central planning authorities. And when Bitcoin was created, actually today is Bitcoin's 15th birthday, January 3rd. This was for the first time in history the achievement of a money that has no central controlling authority. All right. So there's no central planning authority that can debase this money. This is something that the world has never seen before.
So this is yeah. We had, and this is kind of in the wake of the great financial crisis, right? We had this kind of pseudonymous creator. What was he called? Satoshi. Was it Satoshi Nakamoto? Nakamoto? What was it? Something like
Nakamoto,
that.
yep.
Something
Hmm.
Satoshi Nakamoto, this pseudonymous creator. Nobody really knows who he was. Quite a few people have kind of pretended, claimed to be, tried to have prove it, and that kind of thing, but no one's done it. And it was this kind of this new way of transacting was created and then just kind of released, and it's truly peerless because peer to peer because
And
there is
peerless.
no and peerless because nobody manages it. There is no central authority. In order to gain control of it, you'd have to own more than 50% of the supply, which is effectively impossible. Um, and this was created because of, and it was political. And I know we dance because we're a money podcast. We dance around politics, but it is political because people were sick of the finance industry and governments and everybody kind of getting the banks, everybody getting everything wrong, and they wanted to
Yeah.
create truly free money. And so why is that? Well, we talked about Argentina's inflation problem, and that's like that's like a Lamborghini driving at top speed over a cliff. But the US and the UK, in the same sense, are a kind of a bicycle or a horse and cart heading over the same cliff. Kind of, it's the same problem is coming, but it's happening at a bit of a slower pace, right?
Right.
Uh, it,
Right. That
inflation. Sorry.
debasement has more checks and balances to it, in the US and the
Yeah.
UK, whereas the vast majority of the world, that's not the case. And so I think there's something over 160 currencies in the world currently. 80% of the world's commerce is carried out through the US dollar. And so you have we're in triple digits of currencies that really are kind of local coupons, if you will. They're the means of exchange because someone who can throw you in jail said so. If you choose not to transact in the local currency, there could be violent implications to that. And so the cypherpunks recognize this issue, even despite the fact that the vast majority of them have come from relatively stable countries, but they recognize that this debasement is just a never-ending vicious cycle that destroys wealth. It destroys people's life's work. It creates desperation, malinvestment. Um, it creates this hamster on a wheel effect of needing to spend your money before your purchasing power slowly melts away. And so that's why Bitcoin is often referred to as digital gold, because it's a way to back money up cryptographically in a manner where your means of exchange cannot be debased by some central entity.
So
So it
this is
go
let's get into understanding a little, how it like kind of works in a functional way. Because in terms of inflation, the reason why Bitcoin is potential solution, shall we say, um, is because there is a physical, well, not physical, but there is a digital limit on how many bitcoins there can ever be, right? And so take us through that, and then and also how the process of creating Bitcoin. You know, how does that
yeah.
work?
Yeah, so there's two elements to Bitcoin scarcity here. First and foremost, there will only ever be 21 million Bitcoin ever produced. And this is an emission schedule that will be carried out until the year 2140. Okay. Um, so it doesn't matter if some politician somewhere or some central planning entity wants to create more Bitcoin. uh, the rules have been set in place. It was a clock set by Satoshi Nakamoto 15 years ago, and it's cryptographically impossible to create more than 21 million Bitcoin. Then, uh, not only is it scarce, but its emission schedule becomes more increasingly scarce. Every 210,000 blocks, or relatively every 4 years, occurs what is referred to as the halvening. And that means every 10 minutes, Bitcoin miners uh, are playing a global game to win these Bitcoin that are released cryptographically. All right, and it's currently set at 6.25 Bitcoins every 10 minutes. Well, around April of this year, the next halvening will take place, and so every 10 minutes, half of that is going to be emitted, 3.125, which naturally creates kind of this squeeze on the market. The mining industry becomes even more competitive because all of a sudden each miner is competing for half the amount of Bitcoin. And this emission schedule, which was set in place 15 years ago, been functioning perfectly without a hiccup since 2009. This will continue until the year 2140. Okay. And this is backed up by a protocol referred to as proof of work, where these miners essentially are running computers that are solely dedicated to solving a hashing problem. And it's essentially like the cryptographic version of playing a global lottery. The more hashing power you're able to generate can be viewed as rolling dice and hoping that those dice hit the jackpot. And with more hashing power, it could be viewed as having more dice rolling with each 10-minute round trying to win that lottery. Okay, and so it's called proof of work because that hashing power comes with real life costs and expense. You need to buy the hardware, you need to look for the cheapest energy possible in order to remain competitive in this global lottery that's getting increasingly competitive with Bitcoin's adoption going going exponential. So yeah,
So
we'll
this
keep
is
it there.
Yeah, I mean, this is where we kind of run into, and Bitcoin is not kind of, uh, it's not short of controversies, shall we say. It has, harsh
Correct.
critics and that kind of thing. Um, and and this is kind of relates to the mining, is one of the bigger criticisms that you tend to see is how much energy power goes into creating these bitcoins, right? Miners use a lot of energy to do these complex sums every day.
Correct.
So talk us through that a little bit. What where the issue is with that, and I mean, I
Yeah.
understand there are solutions, right, as well.
Yeah, absolutely. So what we're seeing actually is a flip in this narrative that Bitcoin mining is going to boil the oceans. Um, Namely, we've seen a lot of hit pieces by the New York Times, certain studies sponsored by Greenpeace. There's a certain school of thought out there that energy consumption is inherently evil, um, and Bitcoin mining is actively disproving this. Um, Bitcoin miners these days, in order to remain competitive, need to seek out the cheapest energy on the globe. And so, what you're seeing is stranded energy, such as orphan wells that are emitting insane amounts of methane, which turns out is 80 times more. Um, what's the word I'm looking for? The greenhouse effects of methane are 80 times worse than carbon. What we're seeing is Bitcoin miners who all they need is an internet connection. They have the ability to ship out these trailers where they can essentially clamp on a generator that converts that stranded methane into electricity for Bitcoin miners. And so all of a sudden we have a far better alternative to the existing solutions, which are simply to flare that methane. Literally, the best solution up until Bitcoin mining was to think, well, hey, let's set it on fire because we're converting methane into carbon. Where it's
Yeah,
choosing the less of two evils. We see Bitcoin miners also seeking out hydroelectric energy, hydroelectric factories and generators across the U.S. all of a sudden are finding a second life because that energy is all of a sudden marketable. The Bitcoin mining protocol has all of a sudden created incentives, profitable incentives to seeking out the cheapest energy on earth. We also see El Salvador creating volcano bonds. El Salvador as a country is literally mining Bitcoin with geothermal energy. So Bitcoin mining can be viewed as kind of this dung beetle of global energy, where it's slowly seeking out just the cheapest energy possible and raising humanity's ability to consume whatever energy we have at our disposal in order to create better money. So we're seeing the ESG narrative flip
yeah.
at a rapid clip. It's pretty
There
incredible.
there was a report here. I think it might have actually been from, was it KPMG? I can't quite remember now. It was one of the big
Yep.
accountancy firms,
Yep.
and it looked at kind of wind power and stuff like that, because we have a lot of issues with wind power in the UK where, well, you have kind of twin issues where, one, when the wind doesn't blow, you can't rely on it. And then the other
Yep.
one is when the wind is blowing really hard and we're producing way more electricity than we actually need. That electricity
Yep.
goes to waste. The producers who have a lot of problems with like subsidies and the price that they get for their energy and that kind of thing. But actually, if you attach Bitcoin mining to those wind farms, you can actually make the wind farms more profitable, because when the wind is blowing and the energy is not being bought by the grid, they could just use that energy to make Bitcoin instead,
Yeah.
and it
Yeah.
and it changes the economics of it completely. It's very, very interesting.
Yeah,
Uh,
any situation where there is stranded energy, energy that is not being utilized to its fullest, there's the potential to clamp on a modular Bitcoin miner to soak up any energy that isn't being used for human consumption purposes. And so we're seeing this incredible greening effect of what would, what was viewed as, even as much as, or it still is currently being viewed as a horrendous, catalyst of global warming. But certain estimates will place Bitcoin mining as quite possibly being carbon negative within 2 years, largely due to the fact that Bitcoin miners can utilize this stranded methane and effectively extract carbon from the atmosphere through simply using these orphaned wells as a fuel source. There's several other options out there, but we're seeing Bitcoin mining being used as a catalyst to energy efficiency across the globe.
So let's the other kind of big, I think probably biggest criticism of Bitcoin is ultimately, and we're going to come on to the kind of the ETFs, the investment ETFs that are kind of being approved as we speak. It might even be approved by the time this podcast comes out. This criticism is kind of, well, what is it? Is it money? Is it an investment? What are you really supposed to do with it? It doesn't kind of,
Yeah,
you can't really use it to buy things at the moment. Well, you can, but it tends to be quite, niche, something like that. So at its kind of, where are we in those terms now? And then I guess we'll discuss the ETFs as a part of that.
yeah, yeah. Um, yeah, and with that being said, as a Bitcoin educator, I invite all skepticism, all criticisms. A mantra that is popular in the Bitcoin community is don't trust, verify. So if there's anything that I say throughout our time here that doesn't quite square with you, I invite you to do your own research and do some digging and do the work, because Bitcoin is 100% transparent and open source. It has the lowest barrier of entry of any money we've ever seen up until this point in history. And so, yeah, what exactly is Bitcoin as an asset? Is it a commodity? Is it a security? Is it a medium of exchange? Is it a store of value? And I would say it's all of those except for the security. However, in the United States, as we speak, it's going through the securitization process. The SEC has been trying to figure out how to handle this new creation, this asset that just it doesn't fit into any one category. And so an ETF, an electronically traded fund, is effectively a financial vehicle that allows retail investment and corporate treasuries to access Bitcoin as an asset and gain exposure to the asset class. A key component of these Bitcoin spot ETFs is that these corporate entities, retail investors, if they purchase an ETF, there's probably going to be around 20 products offered initially. Um, each dollar that's spent in the Bitcoin ETF has to be backed up by the equivalent of the Bitcoin. Okay, so each entity is legally forced to purchase that Bitcoin on chain, which is it prevents rehypothecation and derivatives from creating an ocean of what they refer to as paper Bitcoin. Again, going back to that fiat paradigm where paper money was supposed to be backed by a certain amount of gold, a certain amount of silver. They don't want these ETFs taking on that fiat element to it. It has to be backed by actual purchases. And so you see Grayscale seeding their ETF with millions of dollars. They're already seeding these products with millions of dollars of liquidity in order to help people hit those smash buys, because all of a sudden now acquiring Bitcoin is a 15-minute call with your broker. All of a sudden, Bitcoin has a marketing department of thousands of TradFi brokers who are looking to, simply make those fat commissions, and all of a sudden there's this incentivization to gain exposure to Bitcoin in kind of a I don't want to say risk free, but it's a more convenient. You have your custody outsourced to a third party. You have a lot of the hiccups that have kept a lot of people from purchasing the asset class. All of a sudden, it's put on these traditional finance rails, and here we are as of recording. It's January 3rd. By the time this is released, these ETFs will most likely be approved, and rocket fuel is going to be dumped on the asset class.
So this is the really interesting thing with Bitcoin, and I think is the really big thing about it, and this is why there's so much hype, I guess, about the ETF. So there's, like you said, the regulator doesn't really know how to treat it. It's not quite, you can't quite call it a commodity. You can't quite call it cash. You can't quite call it, and it doesn't fit into any other boxes. It's a new kind of
Yeah,
asset, product, instrument,
yeah,
whatever word you want to put on it. But what's really interesting with the ETFs is that these massive institutions want a slice of the action, right? This isn't just like cottage industry of people holding it in digital wallets anymore. BlackRock and Fidelity and these guys, they want to sell you Bitcoin and they want a fee to manage it for you every year, and they see the direction of travel, right? And
yeah,
this is a tipping point in
yeah,
effect.
yeah. We are seeing. I mean, certain people on Bitcoin Twitter are calling this the largest event in Wall Street history in the past 30 years. The last big event being the S&P 500 ETF or the gold ETF. And anyone can go onto their charts and see the effects that putting these assets on these rails have had for those asset classes, and there is no reason to think that this will not happen to Bitcoin as well. The big boys have arrived, and they want to pump pump their bags. All of a sudden, they are incentivized to sell you as much Bitcoin as your risk tolerance will allow. And not only that, but you have these corporate treasuries that are simply looking to maintain the purchasing power of their bottom line, and all of a sudden now they have access to the asset class as well. Whereas previously there was no financial vehicle for corporate America to gain exposure to Bitcoin, save for a couple niche ways. But convincing a room of your board of directors of gentlemen that probably have no idea what Bitcoin is or couldn't string together three or four intelligent words. We all come to Bitcoin for number go up technology, as we call it. And everybody comes in at that point, and then you kind of fall down the rabbit hole. And all of a sudden, corporate America is here for number go up, and it's gonna be like rocket fuel.
So, before I kind of get on to my final question for you, Trevor, obviously we don't give out financial advice on Mouthy Money. Anyone listening who's interested in buying Bitcoin needs to do their own research and kind of
Absolutely.
decide what they, like you say, what their risk tolerance is for it. Some people will think that they want to put all their money in it. Some people want to have 1% of their wealth. We're not here to tell you what to do with that. Obviously, you need to make your own decisions. That being said, were I to go out now and get some Bitcoin, how would I go about that without naming any names? I mean, talk me through the process here.
Yeah, I mean, the Bitcoin on-ramps are different depending on the jurisdiction that you live in. But since Bitcoin is a borderless peer-to-peer money, uh, buying Bitcoin, you don't have to buy it. All you have to do is trade your services or your labor for Bitcoin. You can download a wallet. The easiest wallet to download is called Wallet of Satoshi. You download it, give them give them your email address, and boom, you're off and running. If you're a plumber, if you're a roofer, if you're a baker, all it takes is announcing to the world that your services are for sale for Bitcoin. And if someone happens to be a Bitcoiner, this is truly digital cash. The ultimate expression of Bitcoin is a peer-to-peer digital cash. There are websites out there where you can transact in a peer-to-peer manner as well. You don't need to know the other person. The money is held in escrow, and you're more than welcome, regardless of where you live, to go onto these websites and purchase Bitcoin. It'll come with a little bit of a premium because these websites don't require any KYC or AML info to be gathered. But it's only typically like a 3 or 4% premium, which a lot of people think is more than worth it for maintaining their privacy. But yeah, typically you can go online and you can purchase it for your fiat. You can take your dollars, your pounds or euros and purchase it. It'll be sent to a wallet on those websites. And then you can transfer that into what's called cold storage, which is a completely different program for another time. Maybe we can dig into down the road.
Yeah.
But yeah, you can accept it for your work. You can buy it in a peer-to-peer manner. Or there's, depending on your jurisdiction, there's probably some big websites where you can purchase it with your local political coupons, as we like to call them in the Bitcoin world.
Fantastic. Thank you, Trevor. I think that just about wraps us up. We've gone on through quite a journey, I think, from inflation in Argentina all the way through uh, to getting paid to and living in Bitcoin. Thank you so much for joining me. And thank you, listeners, for tuning in. Stay tuned for the next episode. We are now weekly. You can find us on Apple Podcasts and Spotify, and of course on the Mouthy Money website. So thank you, Trevor,
Thank you.
and we'll see you all again soon. Thank you very much.